Tax loss harvesting, 3 words that sound like something your accountant mutters before asking if you want the bad news first. But here's why this actually matters. In a year where markets have whipsawed and portfolios have taken hits, billions of dollars in potential tax savings are sitting on the table, and most investors don't even know how to pick them up. Let's back up and explain what's actually happening here, because the mechanics matter. When an investment loses value, you can sell it, lock in that loss on paper, and use it to offset gains elsewhere, essentially making the IRS an unwilling partner in your bad luck. Think of it like getting a receipt for a spilled coffee. The coffee is still gone, but at least you got something back. The catch is that tax codes, wash sale rules, and timing requirements turn what sounds simple into a game of 3-dimensional chess. There was a moment, maybe around 2020 and 2021, when robo-advisors were marketing tax loss harvesting like it was a cheat code, automated, effortless, practically printing money. Now, in a choppier rate environment with tighter spreads and more complex portfolios, that same crowd is a lot quieter. The psychological toll of this strategy is real, because selling a loser feels like admitting defeat even when it's financially rational. Behavioral economists call it loss aversion. And it explains why so many investors freeze up precisely when the strategy would benefit them most. History gives us some humbling context here. The 1997 Tax Reform Act, the dot-com bust. So the 2008 crisis each created massive harvesting opportunities that most retail investors either missed or botched. The pattern is consistent. Volatility creates the opportunity, and emotional paralysis destroys it. Here's where tax loss harvesting fits in the broader investing cycle. It's a tactical tool that shines in bear markets and becomes nearly irrelevant in prolonged bull runs, which is exactly why its value is always being debated at the wrong time. The Reddit and financial independence communities have strong opinions here, ranging from it's a game changer to the complexity isn't worth it for anyone under a $250,000 portfolio. One of the biggest misconceptions is that harvesting a loss means you permanently exit a position and miss a rebound, but that's not how it works if you're disciplined. You sell the losing asset, wait 31 days to avoid the wash sale rule, and buy back in or buy a comparable fund, keeping your market exposure intact. The practical lesson from every market cycle is this: harvest losses systematically, not emotionally, and pair the strategy with a clear reinvestment plan so you're never sitting in cash longer than necessary. Keep position sizes manageable so no single loss event forces a panic harvest that disrupts your entire allocation. Process beats prediction every single time in this game. The investors who benefited most from tax loss harvesting weren't the ones who timed the market. They were the ones who had a standing rule to review their portfolio every quarter, full stop. Discipline and consistency are the actual alpha here, not cleverness. A mediocre strategy executed with precision will outperform a brilliant strategy executed with emotion, and tax loss harvesting is the perfect laboratory for proving that truth. The irony is almost poetic. The tax code, designed to fund the government, contains within it a perfectly legal mechanism that rewards patient, organized investors for losing money wisely. You can't make this stuff up, and yet most people leave this benefit entirely unclaimed. So is it worth the complexity? For investors with taxable accounts, meaningful gains to offset, and the discipline to follow through, absolutely yes, with a caveat that the strategy must be systematic, not spontaneous. For everyone else, simplicity and consistency still beat sophistication and chaos. At the end of the day, the best financial strategy is one you'll actually execute without flinching. And that means knowing your own temperament as well as you know your tax bracket. Whether markets rally, correct, or do something nobody predicted, your process is the only thing you can control, and that's oddly comforting. And if you're ready to take those savings and put them to work in real estate, need a contractor, or want to connect with a lender who actually gets it, check out our links in the description below.